The wealthy are prepared for the upcoming financial crisis. But are you? Let's talk about it. This is the Hey Ed YouTube channel. I am your host, moderator, and all-around nice guy, Edward Anderson. I'm not a financial advisor, so do not construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. As I'm recording this, it is Saturday, January 11th, and yesterday was another very ugly day in the markets. And we have a lot of things to worry about in the markets here. I'm going to touch upon a few of them. But in the spirit of keeping things short and pithy, I'm going to give you just enough data points to make my point, and then I'll let you get on with your day. Okay, so my concern right now is that too many people, I think, are not really paying attention to what's going on in the financial markets, and their ignorance could have dire consequences to them financially. Now, whether or not a financial collapse is good news or bad news really depends on whether or not you're prepared. And I want everyone in my audience to be prepared. Let's start by taking a snapshot of what is happening in the markets. Okay, so let's take a look at what happened yesterday. Let's go to the 1 month chart. So the Dow Jones yesterday was down 700 points. But let's take a little longer view. Let's take a look at the 3 month chart. Okay, does anybody else see any head and shoulder patterns here? You have a left shoulder, actually this peak right here or here could serve as the left shoulder. Then you got the head, and now we have the right shoulder developed. And right now we are at the neckline. Head and shoulder patterns, for those of you who don't know, are negative. The head and shoulders pattern is a bearish pattern. Let's go back a little bit further. Let's take a look at the 6 month chart. Okay, and here we see how important that neckline is here, right around that 42,000 level here on the Dow Jones Industrial Average. After that is taken out, the next support level is down here at around 39,000. Which doesn't sound like very much, right? I mean, we're still very near all-time highs in the market. That is what's known as a trend line. We have had a trend in place for an awful long time, but that trend is now officially broken. Actually, it was officially broken about 3 weeks ago. But that trend line, that upper trend line, is officially broken. Okay, so what was the catalyst of yesterday's sell-off? Well, we had the NFP out yesterday, the non-farm payroll report, right? And the non-farm payroll report came out, stronger than expected, and so the market is selling off because why? Well, this is a classic example of something that I've talked a lot about on the channel, and that is the idea that sometimes good news is actually bad news, and bad news is sometimes good news. It's all about perspective, right? I mean, the headline number that payrolls were stronger than expected, you would think, hey, well, that's good news. More people are working. Well, from a Wall Street point of view, that's bad news. Why? Because Wall Street likes cheap money. They like low interest rates. Remember, one of the primary mandates of the Federal Reserve is to fight inflation. And their most effective tool to do that is with interest rates, right? And remember, there's a teeter-totter effect, right? So generally speaking, okay, when times are good, when the economy is strong, the Federal Reserve will raise interest rates in order to cool the economy, in order to cool inflation. On the other hand, if the economy is weak, they're trying to, light a fire under the economy by lowering interest rates, by making money cheap. Well, the Federal Reserve has mismanaged interest rates for years now. I mean, these people are either corrupt or they're just plain incompetent. But they have mismanaged, interest rates for many, many years. Now, they did that largely as a favor to their buddies on Wall Street. But now we're in a very precarious position. Whereas the Federal Reserve would like to lower interest rates to continue taking care of their buddies on Wall Street. They're kind of saying, well, guys, I don't think we can lower interest rates anymore. That's why the market is selling off here. The punch bowl is being taken away from the party on Wall Street. And so now you have all of these money managers who have made a fortune courtesy of these Federal Reserve policies for years now. These people have to protect their reputation, they have to lock in profits, and they don't want to be the last one to the party. So they read all the tea leaves. And if they see that the market is going to sell off, they're going to start dumping. This could turn into something pretty big, pretty fast. Nothing's for sure, right? But I'm telling you, the potential is there for a very nasty sell-off. Let me remind you of this. Of the three emotions that drive the markets, fear, complacency, and greed, by far the most dominant emotion is fear, believe it or not. And that's why stocks typically go down 4 times faster than they go up. When people get fearful and they want out, they just want to get the hell out. They don't want to be the last one out. That's what you're starting to see here, I think. You're starting to see money managers saying, hey, man, we've had a very rough, month here, but, we're still near the all-time highs in the market. So I don't want to be the last one out when the market is down a lot further from here. So a lot of that is starting to go on right now. So what have the wealthy done? What has the smart money done? I'll tell you what they've done. They've been buying gold and silver, and they've been buying income-producing assets. They've been running towards safety. Let me remind you of the mantra on this channel. Reduce your exposure to your bank, acquire some gold and silver, and establish streams of passive recurring income. Have you been doing that? Listen, there is a litany of things that to be worried about, and any one of them is a very big deal. What if war breaks out? What if we have another round of banks going under? This market could unravel very quickly. So remember, the smart money, okay, these guys are going to cash. Why are the wealthy raising so much cash right now? They're selling their stocks, they're selling their speculative assets and going into cash, because when the next big financial collapse comes, they want to be able to swoop in and buy those hard assets, for a song. That's how the wealthy get that way. Please stay tuned to this channel as I give you ideas going forward about how you can benefit in a down market, or in any market for that matter. But for now, reduce your exposure to your bank. Get your money out of the damn bank. Acquire some gold and silver, and establish streams of passive recurring income. Please like and subscribe. Ed Anderson, live from a very cold Minnesota, signing out.
Copy that.